Hello and welcome to Crux Investor. We caught up earlier today with Scott Williamson, MD at Blackstone Minerals, ASX listed nickel developer. If you want to hear our thoughts and opinions on that conversation, their plans going forward, and indeed the company itself, you can catch that at cruxinvestor.com/club, where you can also find detailed company reports, commentary from experts from around the world on a variety of companies and commodities. There are training videos on there, summaries of other interviews that we have done just to save you a little bit of time, and of course a thriving community of investors sharing their thoughts and ideas in a nice safe environment. And go and join them now at cruxinvestor.com/club. Of course, we'd love your feedback too, so do give us a like, leave your comments below, and if you want to see what we talked about, take a look in the description below. Scott, how are you doing, sir?
Good, thanks, mate.
Good to see you again. Good to see you again. How are you? Winding down for Christmas,
yeah,
are
we're
you?
getting there.
Are you winding down?
Yeah, again, we're winding down nearly.
I bet you're not. Well, that's good to hear. Well, look, I know you were on about a month ago. You told us then you're going to do a lot of drilling, and I want to hear that you're doing a lot of drilling. But first, give us that 1 minute overview for people new to the story, and I'll pick it up from there.
Yeah, no worries. So Blackstone, we've got the Tarkway nickel sulfide project in northern Vietnam. It's an existing mine operated between 2013 and 2016. The previous owners sunk $136 million into the infrastructure, so it gives us a great sort of start. And we're going to push this into a downstream product. So we're going to take the concentrate, we're going to convert it into a downstream product for the lithium-ion battery industry. So, yeah, it's a really exciting project up in northern Vietnam.
Okay, so on that, are the drills turning?
Yes, yeah, we've got the 9 drill rigs, and there's probably not the problem about the drill rigs turning. It's more about the assay labs working hard enough. And unfortunately, yeah, so what we have to do is once we've drilled, we send the, I suppose, core to Haiphong, and so we do some of the prep in Vietnam, and then we send the pulps or the to the next stage, which we have to go all the way through to Perth in ALS. And unfortunately, yeah, the labs in Perth are just chock-a-block full, and so we're aiming to get something out in time for a Christmas, I suppose, update. But it's still, we're over 70 days to turn around assays, and it's just, it's great for the industry that there's a lot of drilling going on. So we're obviously not the only one sending to ALS in Perth, and there's a lot of good gold drilling going on, a lot of major discoveries happening in Western Australia. So we can't be too disappointed with the reason why the assay labs are taking a lot longer than we hoped.
But 70 days, wow, that's frustrating, I bet. So how many meters have you sent to them?
Oh, I wouldn't even know. It's many thousands, I suppose. I don't know that sort of detail at the moment, but there'd be thousands of meters in the labs, but that's fine. 9 drill rigs, we're spinning, and we've got many targets, and so the good thing is we're hitting sulfide. So we're hitting massive sulfide, we're hitting some disseminated, but almost every time we're hitting something, so it's all good.
How do you know you're hitting it? How do you test it? How do you work that out?
Yeah, it's all visual, and so we use the XRF, so the niton gun. So we get a pretty good reading on the base metals, so nickel and copper. Obviously the gold and the precious metals. We have to wait for the assays, but we know we're hitting nickel, so yeah, we're pretty happy. Okay,
so that's the stuff, the drilling that you have done. How much more drilling are you going to be doing, and until when?
Yeah, so we want to bring in as many of these ore bodies into the PFS as possible. So we've got rigs at Ban Phuc and the King Cobra Zone. We've got Ban Chang, Ta Kung, Ban Qua, and just started at King Snake. So 5 different ore bodies we're drilling. And we want to bring as many of those into this next stage of studies, which is the PFS, as possible. So we need maiden resources on all of those. So, we won't stop drilling, and we won't stop drilling until the mine's operating. Even when the mine is operating, we won't stop drilling. So there's no issues around targets. We're on target 5 of 25 sort of thing. So we've got, and we're generating more targets every week as well. So we've got the 2 EM crews still around the district looking at new targets and generating more targets. So there's no issues with targets. It's just, unfortunately, the bottleneck at the moment is the assay labs.
Right. So talk to me, I want to understand the relationship between EcoPro and you. I mean, again, for people new to this, I mean, who is EcoPro? Obviously they're Korean, but are they a big deal or not?
Yeah, they are a big deal. They're the largest cathode manufacturer in South Korea, second largest cathode manufacturer in the world, and they're a major player in the lithium-ion battery industry. So they make the cathode, and to make the cathode, they need the four ingredients, which are nickel, cobalt, manganese, and which is the precursor and product, and then they need the lithium, and they bring in the precursor and the lithium together to produce cathode. So they're a major player in the industry. They're listed on the Korean Stock Exchange, on the KOSDAQ, and most importantly, we started talking to them over 2 years ago now on our cobalt. So we started the relationship based on cobalt. Then we pivoted to nickel because of that relationship, and they said, "Oh, we're moving to high nickel cathode." So it's a strong relationship built over 2 years now. But most importantly, these guys need more nickel than we can deliver in this one ore body, in this one nickel sulfide district. So they are a major player. They need a lot of nickel, and we're very happy with them as our partner going forward.
Okay, so they're a big deal. They put some money into your company. Remind me how much they put in, what the premium was again?
Yeah, at the time, $6.8 million at a 62% premium to the market at the time. So it was a great, I suppose, testament to where we're heading. They still got in at much lower levels than today's price, but they weren't focused on the price of the day. They were more focused on a long-term strategic partnership, and that's why they were happy to pay the premium. So yeah, they're focused on the next stage of investment, which is most likely at the asset level. So we're looking at a scenario whereby we build the downstream processing facility together, and we look at a partnership asset level investment at that stage.
Right. Now, back when they put $6.8 million in, that was a big deal for you guys. Obviously now it's a little bit different. What did that agreement allow them to do? I mean, they clearly want offtake. Does that give them full optionality on taking 100% offtake, or is it still in your hands?
Yeah, at the time, all we agreed to was that they would have a board representative, which is so we've established a board representative, and we agreed that within the next 12 months of that deal, that we would look to build a formal joint venture agreement, and at that point, then we would look at and consider offtake. But at that point, would be the only time where offtake was talked about. So until now, the agreement is that where we will work together to formalise a joint venture within 12 months of that time. So at the time of the PFS. So once we've done a PFS, we build a joint venture, and that joint venture would then do an offtake scenario with the upstream. So the Ban Phuc nickel mine concentrator, which is 90% owned by Blackstone, 10% local Vietnamese partner, they would sell offtake or concentrate with an offtake to the downstream partnership. So the only real offtake we've talked about is between the upstream and the downstream, and so Blackstone will have an offtake with the partnership, which is a partnership between Blackstone and EcoPro, which would then turn the concentrate into these downstream products, which is the precursor, nickel, cobalt, manganese precursor.
Right. Okay. And where I'm going with this one is I want to understand, are you obliged to form a JV agreement with EcoPro at the point where the PFS is done, or are they just discussions about the process of maybe forming a JV?
No, there's obviously an obligation through that arrangement and that agreement when we took the investment. There is an, I suppose, obligation to work together towards that next stage. So having the board representative and having that major shareholder that is EcoPro, then we're obliged to work towards that partnership. But what we're saying is that that partnership will happen at some point within around the time of the PFS. But there's no reason why we can't, in the same time, be talking to other partners as well, because what we're looking at building something here is that it's big enough to potentially bring in another partner, and that might be an upstream partner or a downstream partner. So there is room, because we're building something that could be of significant scale here. We believe that there's other potential to bring in other partners and other funding sources as well.
Okay, because here's the problem I want you to solve for me. Okay, you put out a scoping study. The economics were pretty tight. The assumption around price that you would get in the market was, above market, and your costs, you put out a base cost, right? So I'm trying to work out how you guys make money. So, I mean, talk me through the process, because EcoPro, you haven't got an agreement with them about pricing yet. That's the discussion that's to come, right? And that's going to obviously affect things. So what are the things that you're in control of now that will allow you to kind of increase the margin you can make? And, why are you so sure about the forward-looking price?
Yeah, so I'd probably disagree about the tightness in the economics. But that's fine. At a consensus price of about $8 a pound, which is not that far off today's price, we're looking at an NPV of 2 times capex. So that there's definitely not tightness there. But what you're alluding to is this NCM price. So the NCM price that we've used and the premium that we've used is on the Shanghai Metal Market's website. So you can go and see that. It's on there. So if you go to the ternary precursor part of that Shanghai Metal Market's spot price, 811, that's the premium. So that's very easy to see that. That's where we've got that. How do we achieve that? Well, we achieve that through a partnership with EcoPro. So it's all about, obviously, we need to bring in the partnership to achieve that price. But we're obviously confident enough to put those numbers into this study because of that strong relationship we have with EcoPro. So, you're right. Until we've got a formal agreement, and this is where I think you're going with it, is until we've got the formal agreement, can we put out that price? Well, we just wanted people to see this is where we're heading. Once we get out that formal agreement, then we're away. And so we're gonna bring in the agreement. And then we've got exposure to these premium products. So, it's important that people see that where we're heading with this journey. Obviously, that's probably why the discount's there in the market at the moment, because we haven't signed up EcoPro formally yet. But that's fine, because we're looking at that around that PFS, and we will do that. So, I can see where the market's probably missed that.
Right. Well, I think you're right. Once that's signed up, you can probably claim to be a more integrated company than you are. Right now, you're a miner. You're a miner, in Vietnam on ASX, and you're trying to prove out the size of the resources that you have there. So I think there is a disconnect. But so what else can you do to affect those things? I mean, for instance, you put out a base case. Are you going to be able to shave costs? I mean, any savings around the capex? I mean, where do you go? What are you looking at?
Yeah, so there's a couple of ways that we can improve. The one is obviously on the upstream. So we're looking at doing the stage capex, turning on the existing concentrator, drilling out massive sulfides, which reduces the capex or cuts the capex in half, basically. So then the upstream component of the capex is minimised, and so there's not much to turn on the existing concentrator. So then we can just focus all of our funding on downstream, and that's where we have the ability to bring in partners like EcoPro and potentially others. So we'll minimise dilution to the Blackstone shareholders by using these funding partners on the downstream, and so a big focus of us is now, how do we peg back the capex? How do we minimise dilution to Blackstone shareholders? And the way we can do that is because of this strong demand we can see coming from those end users. So it's all about, I suppose, progressing that without the big dilutionary event which you expect from most developers these days. Is when you throw out a big $300 million capex, the market goes, oh, what have they done? And then we go, okay, well, actually, for Blackstone, it's a much smaller portion of that we're looking for equity for.
Okay, so and let's again, I just to remind myself and remind people new to this story, is because nickel projects typically have huge infrastructure costs requirements. I know the previous owners have spent 130 plus million bucks on this already, so that kind of helps. But nevertheless, how do you and EcoPro plan this going forward? Clearly, if you're a geologist and you were purist, you'd be drilling out all 25 targets, right? That's what you'd love to do. Build this thing out, have a big boy take it out. But there's an economic pressure from EcoPro who need this nickel. They want this nickel. So has that affected the way that you plan this, the way that you've laid out your spend, your time, your effort?
Yeah, yeah, it's very important. So our drilling is very focused on which ore bodies we can get into the mine plan the quickest, and how quickly we can turn on the mine to maximise NPV. But we know that there will be, with it, by the time we turn the mine on, there is a chance we haven't drilled out the best part of this system. So, well, unfortunately, we just have to deal with that. But we want to try and drill out as many of those as we can before we turn the mine on. But the focus is more on turning the mine on, and then geology. We'll work out the geology as we go, and obviously we want to try and crack the geology before they turn the mine on. But that is, as you say, a dream of the geologist. But from a commercial perspective, we need to deliver downstream nickel products in 2023 to our partner EcoPro. And so that's all I'm focused on right now, is how do I do that best for the Blackstone shareholders, and obviously for the partnership between us and EcoPro. So that's my main goal now, is to achieve downstream nickel products in 2023.
Okay, so how do you deliver that commercial imperative of EcoPros by 2023 in the least dilutory manner, and be able to get into production by 2023?
Yeah, so most importantly, we build a strong relationship, and we bring their engineers in with my engineers, and we're working very closely on how do we do this best for the partnership. But also from a Blackstone perspective, we most likely do it through this stage capex scenario. So we're turning on the existing concentrator, much smaller, high grade, less technical risk on the upstream, and then focus on cranking up this downstream as a partnership as quickly as possible. So yeah, it's very much a focus on downstream, lower capex, quick startup on the upstream, and then going ahead with this downstream as a partnership and a collaboration.
Okay, so that's EcoPro's commercial imperative. Does that mean that this is not the best solution for your shareholders? Is it a case of I'm going to de-risk this, it's not going to be the best, but it's pretty good?
Yeah, so the de-risking is obviously not just for EcoPro, it's for Blackstone shareholders as well. So the ability to de-risk the upstream and manage the technical risk associated with the upstream is a benefit to our Blackstone shareholders and EcoPro shareholders. So there'll be a small NPV hit because, but that's obviously a disadvantage of a stage capex approach. So there's not much we can do about that, but it'll improve your IRR. So your return on capital will be significantly better, but you might take a small NPV hit because in the first few years you're doing a small underground or a small high grade versus the big numbers that we threw into the study. So it is still in the best interest of Blackstone shareholders because we're managing the technical risk, we're managing the funding risk, and we're returning our capital quicker.
Right. Okay. So remind me some of the numbers that you're hoping to hit.
Yeah. So $665 million NPV at $8 per pound. I do question when we hit $8 a pound. It's probably not that far away. And I've been sort of when we put out these studies, we have to pick one number that we headline with, and we want to try and pick a number that has some sort of shelf life. And so if we pick the spot price on the day, it's out of date already. So we're trying to pick a number that is in 2023, and that's when we're going to be delivering the products, and that's why we want to show, okay, this is what it's worth. So I'm confident we've got a Australian billion dollar project, and that will be what it's worth in 2023.
Okay, so why do you think that? I mean, we've had lots of people come on the show and talk about macro.
The way I'm confident in that is because once we're mining and we're producing cash flow, we will trade very close to 1 times NPV.
Okay. Okay, so when are you signing this? When is the PFS going to be ready? Let's start with that.
Yeah, so this assay thing probably hasn't helped us either. We were aiming for late March. There may be a slight delay to that because of these assays. So because I want to bring in these ore bodies, the 5 ore bodies we're currently drilling, I want to throw them all into the PFS. There may be a slight delay, but let's see how we go with these assay labs. If they do start to improve, then we might still be able to deliver in Q1 PFS, and that's that point where we start to talk to EcoPro about this and really formalise this partnership.
And you think that's when the market's going to recognise that you are an integrated company? Is that what you're waiting for?
I hope so. I think it will have to sink in at that point, because what that partnership won't just come with a MOU. That partnership will come with a formal agreement to put in a significant amount of capital. So that has to be the point where the market wakes up and goes, okay, this is real.
How much money?
Well, half the capex. If it's a 50-50 JV, okay, it's $75 million. So that's the sort of numbers that we're looking at. Yeah, in the partnership. It's a true partnership. We bring 75 million. They bring 75 million. It's real. That's when it's real. That's when it has to sink in.
They've got a big balance sheet, so that's easy for them. Do you think you're going to get a good enough reaction in the marketplace?
So, good question. So we will have the ability to access debt. We are open to working with debt providers out of Korea. So there will be a debt component. We will minimise the equity component. So yeah, I think as we're getting closer to that point where we actually do need to raise that money, it should have sunk in by that stage.
Does EcoPro need to underwrite your portion if you're going for debt?
Maybe there is a deal whereby we actually work with their debt providers. They may even look at prepayments or there's other different offtake / financing type scenarios where we minimise the dilution. But equity, obviously, we will look to equity as well. But if the market still hasn't woken up, then we'll minimise dilution to Blackstone shareholders.
Okay, and how quickly after you've provided the PFS will negotiations finish and something be signed? How long is that going to go on for?
I think a lot of that depends on what other competitive tension we have for our product. And I would suggest that timeline or time frame is minimised from what we're seeing in the market. There is a tightness in these products that we're looking to develop, and so I think that that timeline between PFS and joint venture will be minimised because of that tightness and that competitive tension that we're seeing.
Is that 1 month or 3 months?
I'd like to do it within 3 months, yeah.
Okay, a quarter. Okay, mate. Well, look, appreciate you coming on today. I'm glad to hear the drilling's gone well, and I hope you get the assays back soon, because we'd love to see what the numbers look like. And more importantly, what you're starting to see at these 5 other targets that you're focused on right now as well. Appreciate it. Yeah,
thanks, Matt. Yeah, we've got 9 drill rigs going, plenty of assays to come. So we'll keep the market updated on the assays, but most importantly, those assays will then lead into maiden resources. So many maiden resources over in the early months of next year, leading into this PFS. So it's a big news flow in those early months of next year, leading into the PFS. So yeah, it's a lot to come in 2020.